All products go through a series of phases called the product life cycle. Each phase affects a company's cash flows. In the introductory phase, we expect that the cash will not generate positive cash from operations, and it will spend considerable amounts to purchase assets such as buildings and equipment. To support its asset purchases, the company issues stock or debt. During the growth phase, we expect to see the company start to generate small amounts of cash from operations. Cash needed for asset acquisitions will continue to exceed net cash provided by operating activities. The company makes up the deficiency by issuing new stock or debt. During the maturity phase, cash generated from operations exceeds investing needs. In the maturity phase, the company starts to pay dividends, retire debt, and buy back stock. Finally, during the decline phase, net cash provided by operating activities decreases. Cash from investing activities might actually become positive as the company sells off excess assets. Cash from financing activities may be negative as the company buys back stock and redeems debt. In the statement of cash flows, net cash provided by operating activities is intended to indicate the cash generating capability of a company. Net cash provided by operating activities fails to take into account that a company must invest in new plant assets just to maintain its current level of operations. A company must also at least maintain dividends at the current level to satisfy investors. The measurement of free cash flow provides additional insight regarding a company's cash-generating ability. Free cash flow describes the net cash provided by operating activities after adjustments for capital expenditures and dividends. This slide provides basic information from Apple's 2014 Statement of Cash Flows. And we're going to calculate the free cash flow. Again, we're going to start with the cash provided by operating activities. We're going to subtract expenditures on property, plant, and equipment, as well as any dividends that have been paid, to arrive at a free cash flow of approximately $39 billion. Free cash flow helps users determine the amount of cash the company generated to expand operations or pay dividends. The solutions to this exercise will be provided in the next video.